So hi everyone, and thank you for joining us for MSME career event, Designing the Future of Money, Crypto, CBD, CS, and the broader global financial system, featuring our very special guest, Sean Howard. He's the lead product manager at Credo, and he's also an MSME alum, as well as Catherine Gu, the director and head of CBDC and protocol crypto infrastructure build at Visa. So I'm going to go ahead and just turn it over to them to go ahead and give their intros and start us on this wonderful journey. So go ahead, take it over, Sean.
Hi, everyone. It's nice to see you all. I'm only a recent Stanford alum. I graduated from the MS&E Master's Program in 2021. And I was also a Stanford undergrad, International Relations. I found my way into the crypto space sort of on accident. I originally joined the MS&E program as an undergraduate senior because I was a graduate of 2020. And I was originally supposed to start working consulting, but I think what like COVID did for a lot of people, it made me reflect on, what I want to do or how I want to spend the time. And so entrepreneurship and specifically exploring my technical background kind of popped up and joined MS&E. And then while I was in that program, really learning about all the principles and entrepreneurship, one of my mentors at some point through my Stanford experience was starting this CBDC project as a startup within a large French tech company. And due to my various background and experiences in the past, thought I would be a good fit for it, and then really was plugged right into the crypto space just like that. Before that, I was a more casual, understanding person of it, and then quickly learned a lot. Now I run head of product for Criteo's CBDC solutions. And I'm sure we'll get more into exactly what a CBDC is and what that job is like later. But yep, that's me.
And hi everyone, my name is Catherine. I'm also a recent, alum of MS&E. I graduated in 2020, yes. So during just the beginning of the pandemic, and I joined Visa then. So it's been kind of 2 years that I've been at Visa. But but before that, I was working already for a couple of years before I decided to do a second degree. So very, very originally, my background is really in economics. I then sort of spent about 3+ years in hedge fund and really looking at global macro related investment strategies and stuff like that. At that time, I was more kind of getting curious around data and science and all the things happening. I'm wanting to do really an engineering degree. This is why I was thinking about MS&E as a great program, because of I did the computational social science track and really loved it. And it was really during that time I got into the rabbit hole of crypto and blockchains, because in my first quarter I was taking the class with Dan Bonet from the CS department and learning crypto and blockchains. There was another class called incentives in CS. It was super interesting around what's being taught. And later I remember learning stuff from Ashish Goya, who is from the MSc department, and there was a lot more by then around what does it mean in terms of game theories and stuff like that when it applies to crypto and blockchain. So all super fascinating. But anyway, fast forward 2 years post Stanford, I joined Visa. So Visa actually has this new team called Visa Crypto. And we started, I think, back in probably 2018. That was a small group of people coming out of the fintech team and thinking about, obviously everything around crypto and payments are extremely important. And as a payment service provider, Visa is very keen to understand what is the landscape of the future of money, which is also the title of this chat is about. What does the future of money means? And hence, embracing this whole journey in terms of thinking about what Visa's role can play, especially as an incumbent big financial service sector platform. What can we play a role down that road? And I'm on the product side. So I lead everything around central bank digital currencies, and really CBDC is a very, very new thing. I would even say, if you ask how many people even heard about CBDC back in 2020, very few, including myself, because without this job application, I wouldn't know what is CBDC. So that's how little I knew about CBDC also. but definitely just with all the geopolitical stuff happening over the last 2 years, and Sean can definitely kind of provide more kind of context to that as well. No doubt, the kind of the pace, the momentum behind central banks trying to do something, the digital currency space has been just accelerating. And some people the other day was telling me CBDC is becoming viral, everyone's doing this, so it's all of a sudden you see this demand, and especially US, right? If you read the news, there's all the discussion around the Fed coin or like the digital dollar and stuff like that. So I think right now is a really, really exciting time, just combining all the things already happening in crypto, things happening in stablecoin. I'm sure you guys have seen a lot of interesting news and stuff happening this week as well as all the stuff that central banks are really gaining that pace and trying to catch up with all the stuff that they sort of were being a bit quiet before, but now they're really getting onto it. So yeah.
Super cool. I was thinking that perhaps, Catherine, I saw a bunch of the preliminary questions where it's sort of asking just really how CBDCs fit into the crypto space, and maybe even giving a high-level overview of it to a non-technical person, if we want to kind of go into that. So like, what is a CBDC? This is like Catherine said, it's been only a few years that it's really been in the forefront of news and technology and industry. And really, like, this is a question I had to ask myself when I started this job. And it to me, like, I always like thinking about the history of where something is to understand it. And I look at the name. It's a central bank digital currency. And so then it really is trying to think of what exactly is currency and what is money, and what norms have we been used to that could possibly change. Like, we think that the money that we use today, like a dollar or a euro or a peso, has always been that way. But, central bank money has not always been the case. That's not how money is always done. It's just been a store of value, an exchange of value. Before World War I, the US didn't even have a central bank. And then only after that did they make the Federal Reserve to that way we didn't have all these banknotes flying around. Like, you could have Bank of America give a banknote, and Chase giving a different one, different valuations, even in a country. And sometimes countries still have multiple types of legal tender. But I guess central bank has been around since, I think, England in the 1400s. But it's really just for a government to have a role in how we hold currency and exchange value. We've built this sort of global system as the world became global after World War I. We see the Federal Reserve happen. We see more globalization in trade. And we've been sort of building and improving that financial system for the past 100 years. We've been using the same sort of traditional payment and money like infrastructure. We have these central bank fiat currencies like a dollar or a euro or a peso. They have to, maybe for you and I, if we exchange money, it seems simple. We just give, I have a bank at Chase, Catherine has one at Bank of America. It seems like we could do a quick Venmo thing, but behind the scenes, money is bouncing all the way around from bank to bank, from bank to central bank. And if you want to send money abroad to someone else, like say I want to send money to someone in Europe, then it has to go through even more rails. Even though it feels instant, we're actually on a quite sometimes inefficient current payment network and payment rails. And what I see, CBDCs potentially to be, and crypto as a whole, I think that's the second part of CBDCs, digital currency, as an opportunity to continue growing and expanding that. I think like cryptography and crypto seems all new all of a sudden, but it's really not. It's cryptography has been around since ancient Egypt. It's just using cryptographic pictures to mean different passwords or different keys and things like that. And then it became a huge mathematical thing in the 20th century. And the basis of cryptocurrencies that we know, like in Bitcoin, actually started as a mathematical dissertation in the 80s for how to do elections in a trustless environment. That's when David Chaum wrote this like dissertation. And then from that, it was iterated over the years until Nakamoto put it together and made Bitcoin in 2009. And it's still just using these cryptographic mathematical principles to share money. And it can be used in so many different ways. Like, what is a CBDC relative to crypto? Like, is CBDC as inefficient as Bitcoin? Does it have all the mining costs, energy costs? Well, like it could be. I would say, like, decentralized finance requires all in Bitcoin requires all of these different mechanisms to make them work because they're decentralized. Whereas a CBDC, we can still use those cryptographic mathematical principles, but under the model of that we use a dollar or peso or euro today, now digitally. You know, our economy has gone from us just exchanging things in person to this whole digital space. And perhaps like in this new world where we have Web3, where we have just e-commerce, like perhaps it is continually the role of the central bank to offer citizens a trusting, you know, form of money to be able to do in these spaces. And so what CBDCs are is trying to use similar things as crypto, but in a, you know, different way, specifically with the central bank, to modernize and make more efficient the dollar that we have in our wallet. And so it's similar to like Bitcoin and all that, but also I would say a bit different. If that's a good over, I don't know if you would agree or want to add anything to that, Catherine.
No, I think your description is perfect, and it really covers a lot of ground, including like the history and stuff like that. Like, completely echo what you're saying. I think, you know, it is central bank money that we're talking about. Everything is kind of, nothing is new, except now you're talking about something entirely digital. You already have cash, now you have a digital version of cash, which is central bank money. But yeah, Sean, you covered that very well. So. And by the way, sorry, I can't see the question, so I'll leave it with you because for some reason I don't see it on my Zoom.
So I saw, I guess some early questions as well were about, you know, sort of how this will affect policy and how like this will give more control to a government, I would say. And, you know, I would see like any new technology, like with the internet, with, I would say, like nuclear power, it can be used in many different forms. You can use it for renewable, you know, nuclear energy. You can also use it for a warhead, and CBDCs can be done the same way. It's a whole wild west right now, I would say. Like there's no rules of how to do these cryptographic exchanges, how to store value, how the reserves should be done, or anything like that. And, you know, it's possible that, you know, a CBDC can give a government a lot more power, I would say, in control and surveillance, but it could not. It could just be used in a more efficient way to run a more efficient government, I would say. Because right now, how does like governments and central banks work? What's the whole point? You know, they are trying to really understand how the economy is doing and make it stable, and to make sure that the stability of their country's economy continues to go, and the economy develops. And to do that, you know, they have to see how money is being spent, how much, you know, indicate what inflation is, wonder what the interest rate is of the currency, like what people are buying, who needs money. With COVID, we saw a huge opportunity of that, where, not opportunity, but case of it, where, you know, government had to very quickly give people who needed it, from, you know, individual citizens to businesses, stimulus. But it was only as effective as it could be with the systems that it had. But as we know, there was some talk of, you know, some money got to people who didn't need it, or it was hard to get it. In some countries, you know, if you don't have a bank account, you know, it's a huge privilege to think of it in that way in the US or in developed or emerged countries, that everyone has a bank account. But let's say, for the example, the country of Honduras, how could they get the stimulus money to citizens when a good portion of the people who need it don't have bank accounts because it's too expensive, or there's no need for it, or it's inefficient. And so governments are using sometimes somewhat accurate data to try to understand the interest rate, to see who needs it. But with paper money and the rails it does, it's only so efficient. And so the question is, like, can cryptocurrencies, can this new concept of digital money that is cryptographically secure, allow more real-time insights into the economic activity of a country, to be more targeted with how to make inflation, to know the consumer price index, to provide citizens with access to financial services and to transfer things. But also, I guess you could say that they could use it to now know the individual and what you're buying. And maybe the government decides, you know what, I don't know, cookies are illegal. And then the money all of a sudden doesn't work on cookies. And so, like, I think it's kind of the job of people trying to understand CBDCs and crypto in this world. We have to design these new rules of what should be embedded into a CBDC, that allows governments to have sort of these abilities to make things much more effective and efficient and transparent, but also perhaps maintaining the rights of citizens and privacy. And I think we see a whole spectrum of values even shown in CBDCs. So that's why it's so at the forefront of the geopolitical spectrum. Like, for example, because the Federal Reserve happened in World War I, you know, the US dollar for some reason is, you know, the world's reserve currencies. In the US, we really don't sometimes recognize the privilege that is for when OPEC is selling oil, they do the prices of the barrels of oil in dollars. When people are doing international trade, it's in dollars. And that has a huge benefit to the US in terms of import exports and other like foreign affairs. And so like with CBDCs, there's a potential challenge to that. You know, perhaps there could be a new player who wants to share in that privilege or to try a different way. And we see like with the influx of new technology, there's always room for disruption. It seems like China's at the forefront of this, really trying to develop and think about this way ahead of the game on how digital currency should be done and how they can do it effectively. You know, for what reasons, what values, that's really up to for others to decide. We're just trying to help build the tools to create that, though, bring nuclear power.
You guys want me to go through the questions, or
Sure.
Okay. So the first question was, what are the current crypto projects that you think will survive and outlast the rest? I think that's a very broad question, but.
So the question is, what do we think the current crypto project will survive and last? Is that the question?
Yeah, uh-huh.
Yeah, I don't know if that question came from the fact that like this week we're looking at the all the volatility happening on Terra USD or not. I mean, honestly, I think right now is still very much an experimental ground. We have a lot of these different stablecoin projects happening. I think there's still a lot need to be tested. Some of them are testing real life. Some of those are more sort of in some sort of testnet environment. So I think a lot of things are early. There's no one who knows the future, and it's impossible to predict which one is going to survive or not. It really, you know, everything is dynamic. It depends on the use case. And I think, you know, if you wanting to understand which one is having the likelihood of the greatest success, like I would focus on use case. If this kind of particular stablecoin or particular CBDC have a real use application, then I think does have a higher chance of succeeding rather than those that are purely just for DeFi purpose and yield farming and stuff like that. And I say that all from my personal view, right? Like from Visa perspective, I think we're quite like, how can I say? I think we're focused on payments. We're trying to focus on what are the key currencies that can be enabled to allow payments to happen kind of more seamlessly. But I think my personal view is that right now there's so much things so early, you know, we think things are going to be big, and even if you do already reach like billions of dollars of valuation, you know, things can go wrong, and maybe it's because of some protocol design that is not right, or maybe because simply it needs to be battle tested, and there's a lot of trust. And I think that's what Sean said earlier as well. Doesn't matter how you're going to create the money ultimately is about the trust. And if you suddenly have this zero trust evaporating all out of the system, then you know, is not going to survive. And how is that trust going to be derived from? It's going to be derived from real value, and that real value comes from use cases. So I think that's kind of the I always look at different stablecoins from that perspective.
I totally agree. Like I don't know which one's going to last, but all I do know is I feel like, my personal opinion, that decentralized cryptocurrencies will last as a concept. You know, the cat's out the bag, the technology exists, you know, similar to the internet or how other different data systems work, and the ability to operate, store value in a decentralized way, I think will always kind of be around in some form or fashion. Now, will it be Bitcoin, Ethereum, Tether? I don't know. But I think that just the fact that the technology has evolved and is capable, I think that some form or fashion will. Who knows what the players will be, though.
So there's a question in the chat. I think it was regards to the nuclear power comment. So you compare CBDC with nuclear power. Is there an equivalent to nuclear waste too? What are major downsides and risks?
Perhaps you found the constraints of my analogy. So I don't know. Like, I guess, is there waste when you send a text message? You know, data transfer can be extremely efficient, and as long as it's you know, secure, and it's trusting in how it's exchanged or whatever, like there's not necessarily waste per se. If you're relating it maybe to how there's a lot of energy costs with Bitcoin, that is specifically to that coin's design to be decentralized. They have to have mining and this finite amount for it to operate. That doesn't necessarily apply to all cryptos. And so I would argue that there's not really a one-to-one power to waste kind of thing. Are there downsides? That's really up to you to decide. Like I would say it depends on how the CBDC is designed. It could really just be a digital form of what we have in our pocket, and that's it. And so the downside could be the loss potential of what it could do, or there could be downsides of it's more than just a digital form of what's in our pocket right now is a dollar, for potentially negative reasons or negative consequences. And that's another kind of ethical, huge question that the world is trying to figure out. And there's different designs of the CBDC.
Thank you. And then we have a question in the chat. What critical flaws do you see in centralized stable coins like USDC, and what features would Visa's payment system have that projects like Solana Pay lack?
So I think, I mean, it's a good question, but I think it's also like the answer probably needs to be nuanced. I mean, I don't want to generalize because there's many different types of centralized, whether it's stable coins or just generalized system in general, right? I mean, the current financial system as a whole is centralized, but because of all these set of rules and regulations, the centralized system works. You know, I think, go back to what I said for the earlier question, you know, trust is always going to be the necessary component to make a system work. So whether that trust is going to be centralized or whether that trust is going to be decentralized is a matter of how a system design should work. I don't think just because something is centralized, therefore there are flaws, versus something is so pure and decentralized, therefore there's no flaw. I think that's too simplistic of a way. I think it's more the core principle of what are we looking at, and we're looking at trust. And so going back to kind of, you know, how would I think about these centralized stable coins like USDC and stuff? I think it's important actually right now more than ever to have the right set of regulations, the safeguards, because in the end, we're trying to figure out, you know, what are the things that are needed to protect the consumers or the businesses as you're using these money to conduct your day-to-day business. You know, I think this is where the current crypto why is so young, because we lack the right framework to operate. A lot of things we don't even know if it's within the right frame or not. A lot of these are kind of in that gray area. So I think the regulatory clarity is going to be really, really beneficial. Just like how banks operate, we trust a bank despite, you know, whether you like decentralized or not. Like despite centralized, we trust a bank. Why? Because, you know, these banks have the right charter, they're FDIC insured, so we know that they're not going to just steal our money and take it away and just do something else and never give it back. I mean, sure, there's some sort of bank runs happened back in the past, but, you know, we still enjoy some level of protection. And going back to stablecoins, it's just the same. If you're looking at a centralized project, if that centralized project has very clear, transparent auditing trails, you know exactly how much reserve is being held and how these reserves are being managed. And then you see, well, this is how much circulation you have on chain. Then, like, again, it's a matter of your personal preference, whether you want to use a coin or not. But that gives you a comfort, you know, a safety level. At least you know if this is going to be a run, you know that there are going to be some enough reserves or not. But, you know, having said all of that, I think it goes back to the ultimate question about how is that stablecoin project designed? Because everything is going to be automated, going through smart contracts. So in a way, all the policies and rules are very transparent, are printed out there. You just need to really understand those mechanism designs. And I would think to step one step further is like, if you have the right regulations and things, it actually will benefit the entire ecosystem a lot more. So I think I would answer to that. And then the other thing is, what features will Visa's payment system have that projects like Solana Pay lack? So I think, yeah, I mean, you know, going back to the core of why Visa, what these payment service providers in general are valuable right now, is coming from the network effect. You know, at Visa, we focus very much on this notion, this lingo called acceptance. What does acceptance means? It means as long as you have a Visa card, as long as you see that logo Visa when you go into a store that says, I accept Visa, it doesn't matter if you're a tourist and you're traveling to Japan and you're still using your USD associated credit card or debit card. The thing is you can use it, right? And we have built out this network, and right now there's 80 million plus merchants connected to Visa. And so this universality in the sense of a payment network that allows you to take one choice of money and one choice of payment, which is through this credit card that you choose to use, and then it's immediately usable across so many different parts, no matter what. I think that is the real value that comes out of these, you can call it the traditional payment network providers, because over all these years, and we've been operating for 60 plus years, over the 60 plus years, that network effect is the value itself. It's hard to replicate as a startup from day one. But I think, you know, having said that, there's other things we can improve. Of course, there's things like payment efficiency, you know, the cost, like the ways to pay. A lot of people are using QR code nowadays. You know, that's something that like traditional payment providers are not really that far ahead. So I think these kind of new technologies are where the advantages lie for the startups. But I think then we need to figure out how do we innovate even within the incumbent like Visa, and trying to figure out new ways to just to make, I think, consumer life a bit easier in the future. So yeah.
I would super echo what Catherine said on USDC and stable coins on trust. I would say similar to how, you know, Catherine said, when you see the Visa name, you know what you're getting, and then you pay and you know what it is. With USDC, it's like almost maybe putting that Visa name or something when it's not actually the US dollar coin, but is it actually backed, you know, or as trustworthy as the US dollar? These stable coins peg themselves to currencies or whatnot, but they could take all that money and then there's no regulation. So they could go loan it out or invest in risky investments, and there'd be no insurance if they go under for you to still have your money. Some promise it, some don't, some have different rules, some it's gray. And the fact that there's just no regulation or view into it, it can be misleading and it's a perhaps hurtful to consumers and to citizens, because you might, it's in the name stable coin. It says USDC, like a US dollar coin, but it's not the US dollar because it's not backed by the central bank, you know, and there may not even be a US dollar there that's tied to it. There could be, and you know, some, I think different companies, startups are doing it all differently. But the point is that it's so broad, it's so saturated, and there's no rules that like it can be very harmful as well. That's how I feel about stable coins. Like I think there are perhaps useful ones right now, but there's also a lot that aren't. And as people are almost seeing a little bit this week, that sometimes the things that seem stable are not stable. And so that's kind of where CBDC could come in, because then you can know, you can trust it, and it's backed by the government. So as long as you have trust in the economy, you know, not completely collapsing, you know, then it should be fine.
There were a couple questions that were put in the Q&A.
Perhaps we, sorry.
So did you want to go, it's up to you guys, what order you want to answer these questions in?
I thought it could be good, maybe go back to the career kind of space of the second one.
Yeah, I think so too. Okay. So how did y'all get into CBDC and crypto, and what do you find rewarding about it?
I guess I can go first. So, you know, CBDCs, I found it, yes, it is a crypto technology and it's very state-of-the-art, bleeding edge tech, but it's the intersection of a lot of different topics and industries. And similar to how the MS&E degree was, like my background, I would say maybe non-traditional in the crypto space. I started off as an international relations major at Stanford, you know, focusing a lot on international policy, on like, you know, different classes that prepare you to write memos or think of international affairs, United Nations, things like that, and international warfare. And then, you know, I looked more, I had a bunch of other experiences that kind of jumped around. I was the kind of definition of a jump around student at Stanford. I started off as an engineer, you know, as a CS major, did an internship at Facebook, you know, and had some exploration there. Jumped then into international relations and did a startup through the Stanford Seed program at Ghana. And, you know, I really got to see entrepreneurship there, product management, but also fintech, and seeing how in emerging markets, the power of digital currencies, digital wallets, and I would just say digitizing different things to really help them uh, give access to capital and services much quicker. And then finally, this master's. I think in MSNE. I think when I first started, I was supposed to be a consultant at BCG, and I think the startup world, entrepreneurship, crypto was a bit intimidating to me. You know, I just stayed in the more structured environments, but actually taking these classes in MSNE where you have hands-on experience, I would say building a product market fit or go-to-market strategy, or also just talking with venture capitalists, I'm actually surprised every day in my job how much I use things I learned not only in this master's, but international relations and the CS department, even in my minor classes in theater, in directing. You know, in this org, sometimes you're always in public spaces. You have to do these product demos or these pitches to these international organizations, and even like how to speak well is come in handy. You know, this job not only, as I said, has a lot of engineering and technology, but you know, I live in Dallas, but I travel internationally half the time, whether it's in Europe, Africa, Latin America, talking with central bankers, talking with heads of state or ambassadors about how they're trying to view in their country, in their emerging market, wherein they're trying to understand their relation to the US dollar, to the international geopolitical system of like SWIFT payments and international sanctions. And so there's a lot of international relations and diplomacy and writing laws that is involved in a central bank digital currency. And so it's very interesting to see that sort of mixture of technology, but also entrepreneurship, because it's such a pioneering field. There's no rules and everyone's trying to figure it out. Like Catherine said, CBDCs weren't even really a word for 2020. And so like that's kind of how I got into CBDCs. I had all of these various experiences, and you know, through my networks, I did some freelance work, and one of these Silicon Valley startup guys got hired to be, you know, basically the head of a venture company in France. And so they were building out this team to look into CBDCs because they had one of the best AI labs in the world. They had a bunch of engineers, and they said, Sean, you know, you've done startups, you've done fintech, and you've done international relations. Like, you should come on and join us as a co-founder to do this. And so we had the backing of this really large tech company in France, and we've been running with it for the past 2 years. It's been a wild experience, and it's just really allowed me to take each element that I had at Stanford and truly apply them on a daily basis, whether it's, you know, managing a team of engineers to business developments to, again, heads of state, ambassadors, central bank presidents. Even my Spanish classes, we went to several countries in Latin America where they just didn't speak English, and naturally, and I didn't know this till a week before, and I had to very quickly think about, how do I talk about crypto in Spanish when I hadn't taken it in a few years. You know, I did study abroad in Madrid, but that was tough. Luckily, like, I think it worked out over time, and I've absolutely loved this experience. And being in crypto, I would say 2 years ago, I was as knowledgeable as the average Stanford student or average person. And then very quickly, you know, you can ramp up and learn a lot, as I think the industry is as a whole. Like Catherine said, I think it needs to be battle tested, and we're at battle testing. So that's kind of how I got into CBDCs and crypto. Like I said, I can't complain at all. It's been extremely rewarding. I was, you know, just in, you know, it's because it's a French company. I have to go to Paris quite often. You know, that's extremely fun. Or I get to really act out all of my curiosities that I had at this institution. And so I just find it so intrinsically rewarding in really all regards.
That sounds amazing. I'm jealous that you get to go to Paris so often. But yeah, a lot of time jet lags and stuff, I guess, for you though.
Oh, quite.
I mean, so I firstly, you know, I got into CBDC because I was looking for full time in blockchain, and I was definitely, I mean, I spent my summer in between the 2 years doing in a startup for blockchain, and I spent half a year part-time in a startup as well in like crypto related stuff. But actually, when I saw the job post from Visa on CBDC, I thought it was like kind of the most unique kind of job offer I've seen at the time, because as said, I didn't know what is CBDC before this job even posted to me. And you know, I had the background in economics, so macroeconomics was one of my favorite subject, and together with my background in finance and then my path into blockchain all happened sort of, I guess, fortuitously. Like I didn't plan any of these, but you know, it's kind of following the interest, and I guess the industry moves. I think with all the background, I knew already, like I think CBDC could be a shot. It's something that makes sense, something I actually feel quite interested in doing. And I don't want to do it just for the fact that it is crypto, it is blockchain, right? I want to do something that I could actually feel that I've like, it is really about the energy, because um you know, just like Sean, like if you're trying to dedicate like 10 hours, 12 hours a day, every single day on these jobs, it's very intense. If you don't have the right kind of energy that matches the passion and stuff you feel, I really don't think you can last that long, right? So I think that's kind of key. But you know, I also want to shout out, I got into CBDC specifically through jobs. And you know, when I joined, like happened to be pandemic, but also the crypto team was super small at Visa. Like I was kind of employee number 3 on the product team. We're now expanding really, really fast, and in fact, in my team on CBDC, we're soon going to hire another probably 4 or 5 people. I do want to put it out there, because if any of you are interested in CBDC related stuff, do reach out, because what we need right now is people who can build. We need PMs who can execute. We need engineers who can code good stuff, because there's so many good ideas that we have, but it's a matter of getting the right people, getting the resources, and just let's start doing things, because the time is now. So I think that there is a real sense of urgency, especially when it comes to CBDC. And I really want to kind of put it out there, because I'm sure you have been following enough about the Twitter crowds and all the things in DeFi, all the things in crypto. Those are also going strong. But I just want to say that this new addition to all the things makes everything even more interesting, because it's a fair playground, right? Before you have the startups, the entrepreneurs who are doing this. Now you have the central banks who are also actually wanting to deploy technologies using distributed ledger technology to do things that has a lot of really profound impacts. Because think about in the future, if money becomes programmable, if money becomes built on blockchain and is run by a central government, okay, there's going to be rules and things that need to be designed. And that's where, you know, you and I, we need to come in advising, you know, what is the right design feature. You don't want a coin that can track your transaction volume, like history throughout. You want anonymity, you want privacy, you want all of these features. These features cannot all be provided by a central government. It has to be provided by private solutions. That's always been the way the financial system has been designed, right? The central bank made the monetary policy. You then let commercial banks, you then let fintechs, card payment providers like us to figure out new ways to pay, to make things easier, or more secure, or more private. So I think that's going to continue. It's just going to be a different playbook altogether. But yeah, I just want to put it out there that we are definitely hiring, and you know, the best way to get into it is to actually get a job in crypto, get a job in blockchain, and just learning by doing. So hopefully that helps to address. And I'm sorry, I really want to spend more time, but this week has been a bit crazy for our team. So I've already told Linda and Sean, I wish to spend more time with our MSNE group like another day. But yeah, definitely feel free to get in touch with me on LinkedIn or anything, and happy to answer more questions. So yeah, and see you guys soon.
Thanks so much, Catherine.
Thank you.
I just want to add on to what Catherine said. Like, if you feel at all confused or feel like you missed the train, or don't understand crypto or CBDCs, that is simply not true. I would just really want to emphasize that I learned this about 2 years ago, 15 months ago. You know, now I'm head of product for a CBDC country. And when I talk to these sometimes, you know, state officials or leads in digital currencies or governments, people that are in charge of this for countries, you know, all I can say is you're not far behind. You know, like there's a lot of people trying to figure this out right now. And it's moving very quickly. You know, technology is getting more and more accelerant, and it's having to be figured out. Like, and it's really exciting. And there's so many places to plug in, whether it's on the policy and ethical side. You know, we even hired a Stanford student as an intern, thinking of what are the ethical standards of a universal CBDC. So what laws truly protect the basic human rights that people should have? People need to think through that. People need to think through how payment systems are going to radically change. And you know, CBDCs, if done a certain way, could make commercial banks obsolete. And that is simply such a disruption to how the system, the world is designed. It's like, is that a good thing? Is that a bad thing? How will it be done? How can you foster that change? You know, there's so many questions that people can think on a strategic, on a policy, on a ethics, on a technological level. I would say sometimes the crypto seems like the easiest part of the job. I would say, like, trying to get, you know, countries to agree on how their peer-to-peer foreign exchange should be, you know, it's can be a whole nother ball game.
That sounds like a good time to kind of, it's in its infancy still.
Yes,
Like,
yes,
yeah.
I would definitely say, like, it's we're at the party before the party still. Even though it feels like a crypto gold rush right now, that just happens with innovation. I would say you get a lot of, you know, fake gold, but there's also real ones, and there's true, I think, value to society, I would say, in crypto, and it's just taking some time to figure out exactly how it's going to be. It takes, we have to battle test it.
Yeah, makes sense. So we have a few questions in the Q&A, but I'll leave it up to you what questions you want to answer.
Yeah, I see one question on the timeline for US having a CBDC. Well, I would say that about a month and a half ago, President Biden released an executive order for all like branches of government to really start understanding crypto, NFTs, crypto, digital currencies, CBDCs. And so it is becoming much, much more, I think, especially with the war and how the payment systems are looking, sanctions, a more geopolitical topic. And so I think, you know, you asked me a year ago, I would have said, I don't know, it could be some time. But now it seems to be happening quite quicker. One of the most foremost projects right now is being done by MIT. It's completely open source. You know, you can go download it on GitHub. It's called the Hamilton Project. They're doing it in conjunction with the US Federal Reserve of Boston. And they've been thinking 2 years on just the very basic principles of how digital currency should just be stored and transferred. They're going very slow, but they're trying to be very methodical to make the true system that can maybe, you know, be equivalent to how much we trust the paper dollar. And so my timeline, like, you know, this is again just Sean Howard's opinion. You know, I would say we're going to see some pilots in the next 2 to 5 years. The release strategy similar to China, I don't know. I mean, all I know that there's strategies to how you introduce new technologies to populations, and it's different per country and per idea. I would say, like, you know, when I was in Ghana, we really tried to think through what are the key, you know, user needs, user drives, and of what people want in a digital platform there. And, you know, that might be very different to how I would do in the US, Texas versus California. It does seem to be that picking specific merchants and testing it in very predictable ways is a really good strategy to get people adjusted to it. Because, like, think about it, with a dollar or a euro that we have, it needs to be as usable and as clear as for a grandma to a grandson, you know, 5-year-old to 75, if it's truly going to be the basis of store value for a country. And that'll just really take some time. I think that we're going to see this transition. It's not like we're going to go all digital in 5 years. It's going to take a generation, probably 50 years, I think, before we see truly physical currency be gone, if at all.
Yeah, I wonder how long it took for, like, was it the 17th centuries when we had gold coins? And
yeah, even getting off the gold standard, we didn't get off every dollar having some basis of actual gold in a vault somewhere until the 20th century, mid 20th century. And so what we see as normal today, how we spend money, how banks work, Venmo, it's all being challenged and questioned. And perhaps there's new ways that we can see how money is, how we simply store value and exchange it. It used to be, you know, a goat, then we had the Roman doubloon or whatever it is, and we had Egypt had different things. Gold seems to have always been something. Why does gold have value? Because it's shiny. It's shiny and we like to wear it, you know, and therefore it's easy to measure. And that's it. And just saying, why does a dollar have value? Why does it have a higher value than the euro, et cetera? It's just because. That's how much you trust it.
So do you want to answer the Q&A question?
Yeah.
Or? Okay.
I'll see this question. What are the biggest frictions in payment systems? They're asking about global payments that I think could be reduced with CBDCs. Here's one of my biggest ones. Near Stanford is one of the world's largest Honduran and El Salvadoran populations outside of their home countries and other Central American countries. We have huge, cultural communities here. And a huge portion of this community is remittances, sending money back home to Honduras, to El Salvador, and these other countries. Honduras' GDP, 25% of that is remittances of people from the US and other countries sending money home to family members. And when, let's say your income is $500, $1,000 a month, if your family's sending you, 200 or something, that's a huge portion of your income. In those transactions, to send globally US dollar to Honduran lempira, you can sometimes see fees from 6% to 25, 28%, and other various forms of country to country around the world. That's a lot of money to be taken out just on a fee, just by transferring from dollar, because it has to go from, your phone, private money, bank account to this bank, to the central bank, to the SWIFT system, to their central bank, to that, to Western. It's this whole process, and each little piece is taking a cut and has fees on it. And that is a huge portion of a country's, economic potential and real people and families' ability. If I could increase, their income by $100 a month, that would have a huge impact on just overall economic development and purchasing power. And so with the CBDC, it really in crypto allows that whole process to be so much more efficient, using the benefits of cryptography and cryptocurrencies in that way. And so that could be a little instant transaction with maybe a 0% fee, or maybe just 0.01%, but then, all of a sudden the monthly income goes from $500 a month to 600, just by simply making that more efficient. That is the biggest driving factor for me personally to be in the CBDC space. You could theoretically do that with decentralized as well. It's being figured out, it's just, to me, sometimes I see some of these decentralized like Bitcoin more like fine art. It's the price goes up and down. It's finite. It has value, just like I would say a piece of fine art does. But I wouldn't take it to the supermarket to buy groceries.
And then I guess in terms of learning more about crypto, what do you recommend to people to get more educated about this space?
Honestly, like I would say that if you're really interested on a professional level, like I would say just jump in. You really learn by doing the true ins and outs of it. On a personal level, like there's many good YouTube series I found on understanding crypto. My favorite one is called The School of Block. They're not sponsored. I don't know who owns it, probably some person with some interest, but like I really like the way they describe things and really break it down, because like, why is crypto hype all of a sudden? Why not why not in 5 years? Why then? Why now? Like, where does this come from? Like, does it really have value? What is a CBDC? I think they really break down some of the core principles. If you're specifically interested in learning about CBDCs and how this is going to affect the world's payment systems, policy, I would say just the data that's put into the things and how it's going to change the way countries do economic activity. Frankly, a lot of countries have been writing about this, and my favorite one that I found is the most comprehensive is by the Hungarian Central Bank. I have the book actually right here. It's free online. It's called At the Dawn of a New Age, Money in the 21st Century. And this book is thick, but they spent many years and done a lot of research, and I think in a very succinct way describing what could happen and with their predictions. Who knows what will actually happen, but this book really at least helped me think through when I first started. And if you just look this up, or like At the Dawn of a New Age, or CBDC, or Hungary CBDC, they have it on their website completely for free.
And then I can take other questions either from the audience, if you guys want to enter them in the Q&A, or raise your hand. I'd be happy to unmute you. If not, we have a bunch of questions that our students who registered for the event submitted beforehand, so we can dive into those. Let's see. So I think you kind of touched on this, but what privacy issues do you see arising with CBDCs? And do you think CBDCs will be implemented in a centralized ledger format? I think that part you answered, but maybe more on the privacy issues.
Privacy is such a big and important topic today. Like, I think consumers and citizens are really questioning how much these huge institutions, whether it be a private institution like a government, or like a public one like a government, or a private one like Google and Facebook, having all this data on them. And so in a CBDC, sure, it could just be a digital store of value, but they could also tie it to you. They know it is Linda or Sean's dollar. They know what you're spending it on. They could see where it's all been and follow the trail. There could be a lot more things embedded into the system if it's designed that way. And so there's a huge debate on privacy and how private this money could be or should be, whatever, because at the same time, governments really don't want to seem to finance what they call terrorist activity and what they describe as money laundering, illicit activity on the black market just to get around taxes or to fund other illicit activities. And so if they create a completely anonymous form of digital currency, they've completely allowed a way for anyone to do anything. Like, we think right now our money is completely anonymous. It is not. Like, after a certain dollar, actually all transactions you do on Venmo, Apple Pay, or any sort of bank transfer is actually right now already like tied to you. People sometimes don't realize that. And so the big question of privacy is, are we going to lose though that ability for grandma to give their son $5 and nobody know about it, or something like that? And maybe, I would say it depends on how countries design it. Like, I have my personal opinions and how we're designing ours, and the rules in place that are immutable that would maybe allow certain rights of privacy, but they could also be designed not in that way. And that's where it goes back to the concepts, in my opinion, to nuclear power.
And then I think the other one was kind of related to just the energy, that the amount of energy it takes to sustain cryptocurrency. And like, can cryptocurrency in their current form be scaled up without requiring exorbitant amounts of energy to sustain it?
There's many cryptocurrencies that do, expend a lot of energy to maintain, to operate, and to mine. Those are by design, I would say, to allow their system to operate on a decentralized way. That is not inherent to cryptocurrencies. That is simply like protocols that certain ones are using to get around the trustless system, or to not have an entity monitoring it. Now, I'm sure, like, humans are smart, we'll find a way to maybe do it in a decentralized way that is not so energy expended. By nature, a CBDC would not be that way, because it does not need those very costly protocols that require all these machines running or mining the coins. And so, it's the same carbon footprint as, sending a radio wave or storing data on a hard drive.
And then I'm not sure if you answered this question already, but what are some principal use cases for central bank digital currencies, and how are some ways that these can address frictions in the financial system? I think in the beginning you kind of covered this already.
Yeah, no, I mean, I would say the biggest one is remittances, in my opinion. Cross-border payments, being able for these emerging markets and systems to actually be able to have all their money without all these fees attached to transfer from one country to another. We have such a globalized economy now and system of so much exchange around the world that these frictions we have just by one country to another, oftentimes depending on how valuable you are as a trading partner, like, is harmful to a lot of people. And so I think the remittances are one of the biggest ones. I think we also, again, take a lot for granted here in the US. A lot of countries don't have maybe the same level of transparency or security in their currencies or access. We've talked to some island countries, they have to move the money on boats from island to island to get it to all the banks and stuff and to transfer it. That is really cumbersome. And there's apparently a lot of pirates that, try to get the money. And so it's inefficient, and there's a lot of room for error. Just to be able to give people money. How are you on a remote island? How can the country get you a stimulus payment, or how can they embed money into that economy. It's very hard. And printing costs a lot, and to print all these bills and to maintain them and to burn them, to move them around. And so that would save, I would say, a lot of funds and a lot of resources to make it more digital. That's just another example, but there's many more.
So we just had a question submitted in the chat. It says, should the US government create their own CBDCs or endorse privately CBDCs?
Now, on the part of endorsing, I can't speak for the US government. But so I really don't know what they should do. Private CBDCs, history clearly just repeats itself. Like I described when we began, we used to have private bank money. That's not a new thing. Like you would have the JP Morgan banknote or the Pacific Railway banknote, because there was no central one. And so maybe that'll happen again. Now, should the US endorse it? I would say that is not in their best interest to do so. And I guess there's no such thing as a private CBDC, because it's, how can you have a private central bank digital currency? So maybe a private digital currency, I don't think it's in their best interest to endorse, because the more money that's in these decentralized or private places, then that's less accurate depiction of the economy that they get to do proper monetary and fiscal policy, and then they couldn't levy taxes. And I'm not going to sit here and speak about if taxes are good or bad, high or low, but without taxes, the government would not function and they would not get money. And so the more on that, the more wild that gets as well. And, create a hoopla. Now, should they create their own CBDC? Well, in my opinion, is someone building CBDCs, if they would like to, I would say, provide access to the economy, which is now mostly digital, to their citizens, and actually create, a public good that's safe, secure, and free, then yes. And if they want to continue their mandate to stabilize the economy, through the interest rate and promote economic development, I think it's a requirement to improve the system to match the status of the economy in the world.
And then the next question would be, what do you think about tethers? Is that it? Tethers? What role do they play? Is that
one? I really don't know.
Okay,
that's
that one.
Yeah.
What are your thoughts on Solana Pay? Is that
yeah, I would also say on
okay.
There's so many cryptos. I frankly, to be honest, even though it's my job, I keep a minimal awareness of the latest decentralized one.
And then, why is crypto appreciating? Could you please give an overview of crypto? Well, you already kind of gave an overview, but
so yeah, I'm actually looking at the questions as well, and it seems like we might have gone through most of them.
Yeah, I think so. Did we discuss? Well, I guess we kind of did the future and the different existing trends that you're seeing.
I'll talk a little bit about what the future of money could be. Right now, money is really one thing. It's a green bill that you kind of know what it is. It stores value. It's easy to exchange it. In the future, money could look a little different. Now with the CBDC, there can be embedded into the actual dollar or coin or whatever new principles. Perhaps within a CBDC, there's interest rate. So the government is actually, instead of charging interest rates or providing funds to the commercial banks, they could do it directly to the citizen and allow the money to appreciate over time. And you can have a savings account through the central bank that gives you interest. They could also do it for use type. Perhaps right now we have food stamps and other welfare projects. There could be specific CBDC coins that I provide to you that are used, that can be used only at a supermarket or for food or for apparel or things like that. You can do ones that have time limits. Perhaps right now, the country of Panama, they tried this during COVID. They're like, okay, we need to give our citizens, economic stimulus. How do we do this? They took all of the ID cards in the country and turned on the barcode on the back. And then they put $100 on their ID cards every month that can only be used at supermarkets, but it expires at the end of the month. And so now they've made a form of central bank currency on that, essentially, that can only be used for a specific use type and has a time duration. And it's using some of the same principles that we're kind of talking about, where they can be really embedded into the money. That could happen, or perhaps like the world lands on it really just being a more efficient digital version of what we have today. Who knows? I would say. I think we're definitely going to see a wide variety and mixture from country to country.
So one question submitted by somebody in the audience, and I think maybe you just answered it with your example of the ID card, but could you give an example of CBDC? I still don't quite understand it.
Sure. I think I can. Let me start over again on this. So we have, in our wallets today, we have, bills, $1, $5 bill, whatever, that has a serial number on it that is, it says it's verified, backed, minted by the Federal Reserve of the United States of America. And, they mint, they burn, and they monitor how all the money circulates in the world. We trust it because we trust in the US economy. Is there any gold or something in some vault somewhere that's representing that dollar? No, it's just $1 is worth $1 because we say it is, and we trust that. Now, we buy things online. We exchange money online. We save money online. We get interest. There's all these crypto assets and NFTs and this whole digital economy. How can we take that same concept of a dollar that just is by the central bank, serialized, and it just has that trusted store of value by the government? How can we turn that digital so that you can still have that dollar in the world? You might say like, oh, I already have this. Like I pay money online from my bank account, whatever. That's a little different. Private bank money is not actually the same as a dollar, because truly, like the commercial bank, like Chase, for example, or Bank of America, they have dollars in their account, but that the dollars that you put in savings actually lent out and put all over the place, and there's rules and regulations of how much they can do that, but it's actually not the same. And in a lot of countries, you might not even get that because of issues with banks, or there's lack of access to bank accounts, and things like that. And above all, it's privatized. And so with privatized, you also get fees and other things and data being used. And so a CBDC is simply trying to take the dollar, the euro, these currencies that are built, designed, managed by central banks, turning it digital. And they're doing that by using the same kind of technology and principles as cryptocurrencies, like Bitcoin, Ethereum. Yes, they have all of these extra things to make them decentralized protocols, and proof of works and whatnot. Sometimes they're energy intensive, sometimes not, have different properties. But at the end of the day, they're simply using mathematics, cryptography, to be able to, send something to someone else in a trustless environment. The paper that Bitcoin was based off of was supposed to be used for elections, because they were trying to ensure that there was actually valid number of votes in a decentralized way. And so that's what a CBDC is. Now, if you're asking for one that's already in use in the world, there's not any fully deployed CBDC yet. 98% of the countries around the world are building, designing, piloting, or researching a CBDC. So it's a matter of when, not if. The furthest along, I would argue, is China. They've been at this for several years. They used it at the Beijing Olympics. They've had trillions of dollars of transactions on it. They're trying out all these different features, whatever. Now, that will all look that way? No, it can be, they will look in some ways like that and other ways like not. There's 200 central banks in the world. We might see 200 different kinds. I doubt it. I probably think we'll see 4 or so. But that's the most real life example. Jamaica also has one called the sand dollar. Those are the 2 most furthest along ones, but I would say a lot of countries are doing that. I now see, so what is the point of developing CBDCs if they are centralized? The goal is not to combat, to fight, or get rid of Bitcoin or Ethereum, or to stop DeFi. That's a world that exists, that is using crypto. Some governments may not like it, and they may try to mitigate their currencies to be used for it. They're doing that already, with the tools they have now. The point of a CBDC is to provide the basic financial service of store of value and exchange of value to citizens, and for the growing digital economy. That is something we really take for granted in a lot of developed countries. And even now, like there's still a lot of frictions. Like just a few years ago, it's still a process if we have two different banks to send money to each other, or you have to wait 2 to 5 days to deposit from Venmo, or you get a fee. Every time you use a credit card at a restaurant or any place, there's 3% to 6% fees. And that either hurts the business because it's cutting into their costs, or they're raising the prices and passing it on to you. So prices are higher. CBDCs make it more efficient. There's less middlemen, there's less processes, there's less things that have to go for. So it's more instant, just like you can do a text message in a secure way. That's the point of developing a CBDC. From a user citizen's perspective. From the government's perspective, it can allow you to be much more transparent, effective, accurate, and precise in real time. It just really allows you to show how money is flowing and going. Like now you can in real time see like if a certain region or activity, economic activity is losing circulation, or something is raising in price, lowering in price. You can see the savings rate of citizens more. You can see better the actual pulse and status of how your economy is doing, and you have more effective tools to help it continue to be stable and grow, which we're seeing is a problem. Like right now we're seeing hyperinflation because partially part of the Federal Reserve's tools are simply just ineffective or are not as accurate or precise as they could be. We see other countries like Venezuela and Argentina really trying to get a hold of the country. It's trying to manage an economy. What is that? It's this unknown thing of just people, the market exchanging things. And what is the government's role in that? That's a whole ethical debate, but at least right now, the mandate to central banks is to stabilize it by a certain interest and inflation rate. And a CBDC allows that to be a much more transparent and effective tool. Someone says a concern of CBDCs besides privacy. I could see it as just like getting political on controversial topics on what is illegal and what is not. For example, what if a country determines, hypothetically, that abortion or Planned Parenthood or something like that is illegal? And what if they now make it so that money no longer works at those places because it's illegal? There's already instances of this happening with the money systems we have today in other countries. And in a sense, it kind of happens in the US. Like you can't, technically you can't really just go out to use a credit card and buy heroin or something, and so this just makes this much more powerful. And so that can be very scary. And so that goes down to then I would say the engineers and the people designing the CBDCs and the world to decide on these ethical standards and what should be allowed and what should be built into the code of a CBDC to allow a government to do X, Y, or Z. And that's one big interesting question that I'm looking at, and I know actually a lot of people throughout Stanford at business school, law school are also thinking about.
So do we have any more questions from the audience? And if we do not, we can cut this a little short. Sean, thank you for kind of taking over. And it was
no worries at all.
Catherine here too. But it sounds like you're doing really exciting and impactful work that is going to maybe not show right away, the full fruition of it, but in 100 years, hopefully we'll see.
I would say less than that. I would say we're going to see some major wild changes on the geopolitical space in next 2 to 10 years. If anyone's any more curious about CBDCs or crypto or just how to get into it, how to learn about it, or resources, I'm going to drop my Stanford email. If anyone is free to email me, I'm always happy to talk and help people understand this. I got to the understanding I do by others also helping me, and from Stanford professors that I've called or colleagues and whatnot, and YouTube videos, and so always happy to pass it on in any way I can.